Hello and welcome to Good Returns. We have a very special guest today. We have Deepak Gagrani from Madhuban Finvest, who is the founder of the company. And we are here to discuss about the interim budget, um, which will be, published on February 1st. Very warm welcome to Deepak. Thank you for joining us, Deepak.
Thank you, Shruti, for having me here. My pleasure.
Right. So this is the election year, and everybody has expectations, some kind of expectations from the interim budget. And although our finance minister Nirmala Sitharaman has already ruled out any spectacular announcement, what is your overall expectation from the interim budget?
All right. Okay. So I think our finance minister has already laid down the path in terms of tempering down expectations to have any full-fledged or large-scale announcements for the interim budget. And I think I obviously that is what is anticipated, that this will be a very tempered budget right now, which is going to be announced on 1st February. And then we would expect a much bigger, large-scale, full-fledged announcements on budgets once when the new government is on board, which would be later in the year. So
Sure.
no major expectations, for this interim budget right now.
No, fair. Now, very recently, our Prime Minister Narendra Modi has said that India will soon be a $5 trillion economy, will also be third largest economy in the world. In your view, what will be the major driving factors for the economy? Which sector do you think will drive the economy, in your view, say for the rest of the year, for next year, to make India the third largest economy in the world?
Sure. I think, for a very large part of the last 2 decades, we've been more of a service-oriented economy. But I think given what, has been the thrust of the government and the other regulatory bodies around to focus a lot more on manufacturing, I believe this is going to be the sector that should help propel, the overall economy and help us achieve the much coveted $5 trillion mark, in a few years from now. So I think manufacturing should be one of the biggest drivers, that should do well over not just for next few quarters, but I think overall, that should be the theme. While service industry continues to consolidate, the real uptake will come from the manufacturing industry. What would be, some specific reasons around? Most of the large companies outside India are now really looking very strongly towards India to kind of have India as an alternate to China in terms of their manufacturing setups. So I think these are areas that will help the overall manufacturing sector. In fact, manufacturing sector was the largest, in the recently announced GDP estimates. So manufacturing sector actually had the highest increase. And I think that part should continue around going forward as well. So I place my bets on manufacturing sector overall to help India, move towards the $5 trillion economy mark.
Absolutely. I agree. First it was Apple, and now Elon Musk has shown so much interest that his manufacturing Tesla cars, plans to manufacture Tesla cars in Gujarat. So that's fantastic news. Let's now talk about the stock market. Indian stock market, although volatile, have reached new record highs in time. Which is a good thing. However, there are many, probably I would say, threats to that. globally from around the world. There's a war going on. There's Russia Ukraine war, and now Israel and Palestine war. There are several central banks around the world, including the Federal Reserve, who've kept interest rates high for a long time because of high inflation. Um India is in a much, I would say, safer space now because inflation has cooled off and growth rate is very modest. So, what is your view? What could be probably the downside risk to the stock market or an upside risk to the stock market apart from the upcoming Lok Sabha elections?
Actually, you rightly highlighted that the stock markets could be volatile this year, given the fact that there are central government elections in India, as well as there are elections around the world, including US in November. So this is actually a year of elections. But what I believe is that India is in a much sweeter spot currently. Because one, the economy is doing well, and two, while yes, global uncertainties do prevail, what has been a very important and a very positive development that has happened over the last few years has been the emergence of domestic investors in India. Through a chain of direct investments or mutual funds and other modes of investment in equity markets. So if at all there are, if FIS flows will continue to be volatile given what's happening in their own geographies. But I guess, the domestic liquidity should be good enough to support the markets overall. Yes, it will continue to be volatile. What is quite possible that maybe we have, at a calendar year, after 8 straight positive years, okay, in terms of Nifty, giving a green tick mark, okay, over last 8 years, it's quite possible that we may close marginally lower, okay, or could be into, red this year when I look at a calendar year. But I guess, all the volatility this year, I would continue to be a strong, buyer, or these would, in my opinion, would be good opportunities to keep adding on to the Indian equities,
Sure.
and take advantage of the volatility.
Sure, that's an interesting answer. Um, uh, like we spoke about the Fed and the RBI, raised interest rates now. We have an RBI meeting coming up next month, early next month, right after the budget. Um, what the overall wider expectation is that the RBI will keep its repo rate unchanged at 6.5. What is your view? What is your thought on that? Because most analysts and economists are expecting that later in the year, once the Fed starts cutting rates, is when the RBI will start slashing interest rates, repo rates for us.
Yeah. So I would have a very similar expectation that this RBI meet, okay, would be where they'll kind of continue to keep status quo, both in terms of the rates as well as in terms of the commentary around, which would be more to support overall growth. I think inflation is largely getting under control. Okay, so that would give that added comfort to RBI, to kind of continue with the current status. With respect to, I think, Fed reducing rates later in the year, I think a lot of that would also now depend in terms of what's the commentary by the Fed, on just before the budget. Okay, so in fact, on 30th, they have their meeting. Okay, so a lot of that would depend in terms of what is the commentary out there. Because inflation in US has kind of continued to remain a bit more volatile than what Fed would have liked it to have happened. But I
It's
think
much higher than the 2% target right now. So,
absolutely. So and the last estimates also. I mean, the last inflation data was also kind of higher than what we estimated. Numbers were. Okay, so I think that would kind of continue to keep Fed a bit nervous in the short run. But I think as you mentioned about Fed in kind of looking to reduce rates sometime later in the year, I guess India would kind of follow them. Okay, but there would be slightly some sort of a divergence around. Okay, because we would also want to keep some sort of an interest rate arbitrage between what is there in the US and in India around. So we may follow the path, but we may not follow the path at the similar pace in terms of the interest rate reduction. Given the lot of other factors, okay, that would also contribute in terms of determining the overall direction of the interest rate cycle, at least. So I don't anticipate a substantially high number of rate cuts happening in this year. But yeah, sometime next year, okay, this could kind of RBI could follow what Fed is doing.
Right, right. Fantastic. Nice answers. I have one last question for you, Deepak. Um, do you have any advice for younger investors who wants to invest in mutual funds or stocks or any kind of assets? Do you have any advice for them?
Yeah. So I think there's just one advice: stay invested in India. Okay, India as an economy, I believe, okay, is at a cusp of what kind of growth that we will see as what maybe say China did last few decades. Okay, we are possibly entering in that same phase. Stock markets may continue to remain volatile, but the kind of wealth that one could create by staying invested, okay, over a much longer period, and when I say long, look at it kind of at least a decade from now, I think there is substantial wealth to be made, both by staying invested in India. So take use of or make use of the opportunities that markets will give in terms of being volatile. So yes, short-term corrections will continue to keep happening. Use those opportunities to make lump sum investments. Continue with your staggered investments, okay, through SIPs, either in mutual funds, direct stocks, or otherwise. But I think the mantra is very simple: stay invested in India. There's a lot of wealth to be made. One by the economy itself, okay, and as an investor, okay, leveraging and benefiting out of the growing economy.
Right. Fantastic. Thank you, Deepak, for joining us today. Those answers are very, very nice and inspiring. I hope you had a good time too. That was Deepak Gagrani from Madhuvan Finvest, is the founder of the company. Thank you, everyone. This is Shruti Sarkar signing off from Good Returns.